business, you have to go into the marketplace.
Registering your business automatically means you'll be overtaxed. True or false? False.
You get it? If you don't get it, forget about it.
Once you pay VAT on goods, you fully settled all your tax obligations. True or false?
False.
You can be taxed even if your business is not registered. True or false? True. If your money is paid into PayPal or a foreign account, it cannot be taxed in Nigeria. True or false?
False.
Poor tax education is a bigger problem than tax rates in Nigeria. Join us by 5:30 p.m. West African time as we discuss the new Nigerian tax law. See you there.
800,000 naira income. No, you don't pay tax on your bank balance.
Paying means pay as a hen with the system.
LT Business School. My name is Emmanuel Onosami, and I will be your moderator for this evening. I'm super glad to be doing this. I want to use this privilege to appreciate our daddy and our mommy for this for the privilege to do this, this evening. I believe strongly that it's going to be an exciting time, having this conversation on the new tax laws in Nigeria and discussing everything that you need to know to stay informed. But before we go right deep into the conversation, I want to take opening prayer. And I have with me in the studio nobody else but our very own Pastor Sesame Smith, the principal of GLT Business School. He will be taking us in a short prayer. Over to you, Pastor.
Thank you. Good evening, everyone at home. And let's pray. Father, we thank you for the privilege to be here this evening. We thank you for Nigeria. We thank you for our country. We thank you for our leadership. We thank you because we're a country that you have blessed and your hand is upon. We thank you because you put us in this country for a purpose. And as citizens of this country, we call Nigeria blessed. Lord, as we start this event this evening to discuss about the new reforms and policies regarding tax, we ask for insights, we ask for clarity. We ask that everyone who will be speaking, Lord, you use them to speak words clearly that everyone will be able to understand. And at the end of it, we know that our country and our nation will be better for it. In Jesus' name we pray. Amen. Amen. Thank you so much.
Amen. Amen. Thank you very much, Pastor Sesame Smith, for that prayer. I believe that everyone joining us this evening, you must have heard something about the new tax law, the myth, the facts, the fallacy, a lot of things flying through the social media, and you've been wondering, which one do I hold on to? I just want you to relax. This evening, we'll be able to do justice to everything that you need to know to make informed decision and position yourself for opportunities in the new tax regime that we have in Nigeria. Glory to God. Once again, this conversation is coming on the platform of GLT Business School as a pre-expansion 2026 conversation. By now, you should be getting ready to be part of Expansion 2026. In the course of this conversation, we will also dive deeper on the things that will unfold in this year's edition of Expansion 2026. Let us know where you are joining us from. If you are joining us from Dallas, Texas, or from Nigeria, let us know where you are joining us from. You can use the chat box, both on YouTube and Zoom, to let us know where you are joining us from. The Nigerian tax environment has taken a new look. If you are following the conversation, when the new regime came in, the president, one of the things that he promised as one of his major manifesto is to relook the effectiveness of the tax regime we have in Nigeria. And he's making good his promise. Immediately inaugurated a committee led by Mr. Taiwo Edele and they finished their work, came up with their recommendation, and today we are in the new tax regime. The old is gone. You know, somebody say, oh, the old is gone. Now we are in the new. So you need to know what is in the new so you can be rightly positioned. But before we dive deeper into, the conversation, I want to let you know that there is room for you to ask all the questions that you will need to ask us, the speakers that will be coming up later today. There's a Slido link on your screen. If you scan the QR code or just type the URL on your browser, it will take you to the page where you are able to do that. And before I will come back to the pool, because we need to gauge the audience in the room so we can target our conversation right alike. But let me quickly go to Pastor Sesame Street, the principal, GLT Business School. Can you tell us a bit about GLT Business School and why GLT Business School is pursuing this vision of, engaging the people, getting them informed about the conversation of this evening?
Okay, thank you, Manuel. I think I'll quickly start by reminding us about the vision of the school, which is to, talk to us about the wisdom for business, right? Stressing emphatically competence and character. And Apostle Shegun and Funke Obaje have been, very emphatic on why we must have a school like this and a program like this. And one of it is we want our people to be able to thrive in wherever we find ourselves. And to do that in any organization or in any society, you must be compliant, right? You must legally be compliant. And tax is one of those ways that you are. You can do nothing but for the truth. So we have to have people who understand, what the tax laws are, who have gone through it, who engage, generally with it, and they're able to engage us on the conversation of what we must know, what we should know. Yes, we have a lot of enlightened business people in the house, but like in most things, there are some gray areas because it's not a space you function in every day, right? You want someone who functions in that space every day to be able to sit down with you and take you through from at least the basics. You might not get to advanced, but at least get to the middle lines where you are able to, defend yourself or speak when spoken to. So that's one of the reasons why we're having these conversations pre-expansion, so that our people are not, in the dark regarding what the government has set in place to do. And like the joke we were cracking earlier on, you don't want to end up like Zacchaeus, where you have to pay 4 times more what you are supposed to pay because you didn't pay when you were supposed to pay it, So that's it for now. Thank you.
True. Thank you very much, Pastor. But if I can just mirror something that may be going on in the mind of the people listening to us right now and say, well, what are they really using this tax for? Look at, I have to provide this for myself, I have to do that for myself, and do you think is justified for me to be paying tax? Do you have anything to say to respond to anyone that may be having that kind of notion at the moment?
Okay, like everything Jesus did while he was here with us is like a role play for us to also see that as we live our lives, we're able to do some of those things. And you remember in Matthew 17, where the people met with the disciples of Jesus and asked, does the master pay tax? And Jesus had to tell Peter, go to fish, and when you fish, take the silver coin out of his mouth and then pay for myself and yourself. We must live. The law is not made for the righteous. It's made for the unrighteous, like the Bible says. And we must live our lives in a way that we are always on the right side, There's no authority that is set up that is outside, that is void of God's authority. The government that we have today, God put that government in place. There's no power that you can have without God. And if the authority has said this is how we're going to, even during the days of Moses, they had what they call the temple tax, And if you want to go through the Bible to find out, okay, when was the first time we paid tax, and should Christians pay tax? Those things are outlined. But since we are not in a theology class, I will leave it to you, the professionals, to break it down.
Thank you very much, Pastor, for those thoughts. I believe you've helped me, settle my audience already, so we can cruise now. We can cruise in the conversation. So thank you very much. If you are just joining us, you are plugged in into the pre-expansion 2026 conversation. Today's topic is on the Nigerian New Tax Law. What you need to know, all you need to know. And we have curated speakers that will be taking us into some of those things that we want to bring to our attention based on the category of audience that we have in the room. Let's quickly take some poll from the audience in the room. Wherever you are, I believe you are plugged in into the Slido link now. You have scanned the QR code and you are ready with us, to take the poll. So I'll be opening the poll now. So the first question is asking you to select which option applies to you. So by now you should see the poll. I am a business owner. I am an employee. I run an NGO. I am a freelancer. You can choose any of these options. So I'm waiting for a vote so we can quickly move on to the next question. Let the poll start coming in. I believe we have it on our screen, the QR code to join the link. Or you can simply, go to slido.com and put in a session ID 3684517. 3684517. Please select which of these options applies to you. I'm a business owner. I am an employee. I run an NGO. I am a freelancer. Can you take the code again? 368. So the session code is 3684517. 3684517. Okay. The responses are coming in. Yeah, thank you. The responses are coming in. Yeah. We just have very few votes for now. We are targeting a number to make the statistic very reliable. So if you are still there, please, you can join the link, so we can have an informed conversation, this evening. Okay. I think we have the temperature in the room on that particular poll already. So I'll be moving quickly to my second question. And the second question goes, okay, how much do you know about the new tax laws? The options are there. I know nothing. I follow conversations in the media spaces. I am a finance or tax professional. We want to know, we want to gauge the room. Okay, still waiting for the responses to come in. Thank you. So, okay, we move to the last question for this evening. The last question says, how convinced are you that the new tax laws are in the benefit of all? How convinced are you that the new tax laws are in the benefit of all? Wow. Interesting entries here, And Pastor, it's interesting to see some of the things I'm seeing here. And for you personally, let me take that last question. How convinced are you that these new tax laws are for the benefit of all?
So the reason why we're using Slido is so you don't know what that is.
Now I'm putting you on the spot.
Now you're putting me on the spot. Actually, I picked at that I'm actually indifferent.
Indifferent.
Yes. Because over time, you know, the first thing most people would say is, what do they use the tax for? You know, I'm in Lagos. I can say I enjoy the coastal road, right? So in that way, I can say, okay, maybe part of the tax that has come in has been used for the coastal road. But my knowledge is also limited. I haven't worked in government before, so I don't know how they allocate or appropriate the funds. We watch it on TV and we see the senators say, okay, we are going to do this. We hear our ministers say they just spent 40 billion on CCTV, on 3rd Million Bridge, you know. We see all those things. I was like, okay, is this how money is supposed to be spent, or is this how money? So, but I guess as we have more knowledge about how these things operate, we would be able to now, you know, say, oh, okay, it's good that I'm paying my tax. It's being used for this or it's being used for that. So as you enlighten us, we will get to that point where we will have a very clear answer. But for now, I'm at the middle. I'm neutral.
Thank you very much, Pastor. But beyond Pastor's opinion, let's see the popular opinion in the room, you know, that we have in the studio this evening. For the very first question, you know, the response, yes, shows that we have more business owners in this room this evening. About 52% of the people hooked up to this session are business owners, 29%, you know, employees, and then freelancers, about 19%. You know, the second question, how much do you know about the new tax law? 17% says, I know nothing. You know, 83%, I follow conversations in the media spaces, and 0%, we don't have professionals in the room. You know, 0% says, we are not professionals yet. Okay, the last question then, how convinced are you that the new tax law are for the benefit of all? You know, 13% are very convinced, 60%, very huge chunk of the people that voted says they are indifferent, just like Pastor Smith. They are in the same WhatsApp group. And 27% says, I completely disagree, you know. Hopefully by the end of this conversation, some of these opinions and thoughts or postures may have shifted, you know, as we bring about the understanding of the new tax law. Just to remind you that you can still use that same Slido link to push in your question, and we will get it right away in the studio. We also have time to take all your questions. So I will quickly go straight into, you know, the conversation of tonight and do the introduction of our speakers. So we'll be having 3 speakers, you know, enlightening us this evening on the subject of the new tax laws, and they will be speaking to different aspects of the new tax laws, you know, the aspect of what business owners should know, the aspect of what employees should know, and every other person, NGOs, religious organizations, foreign investors, what you need to know about the new tax law. But just setting the context, I want to remind you that, you know, in June of last year, 2026, the president, you know, assented on 4 new tax laws in Nigeria that replaced almost about 66 old tax laws. You know, and one of the objectives of the new tax laws is to provide simplicity and make administration of taxes easy. So these new tax laws are the Nigerian Tax Act 2025, Nigerian Tax Administration Act 2025, Nigerian Revenue Service Establishment Act, you know, and then the Joint Revenue Board Act. You know, the Nigerian Revenue Service Establishment Act is the act that abolished the former Federal Inland Revenue Services and replaced it with the Nigerian Revenue Service. And the core objective of the reform, if I can quickly, you know, bring you into the foundational understanding, is to simplify and modernize our tax law. Our tax laws appeared archaic, you know, handed over by our colonial masters, and that is what we've been running with, so they are no longer relevant for our contemporary times. Also, the objective is to enhance equity and fairness and promote what we call progressive taxation, where you are taxing the poor less and taxing the rich more. So what we have now is an environment that seeks to allow the poor to breathe, just like our president has committed to say, let the poor breathe. Don't suffocate them. So the tax law has been readjusted to allow the poor have better breath, in this state. And then also broaden tax base and compliance. So it's broader now. More people will be captured into the tax net. The digital economy will be captured, unlike what we used to have before. And also improve administration. I believe you can hear the conversation around collaboration with France and all that. All those are in the bid to improve tax administration. Let me stop there and go straight to introduce our speaker. We will take the conversation further, this evening. So I have my speakers here tonight. The first person I'll be, introducing is no other person but Mrs. Blessing Akinwale. She's a chartered accountant with over 8 years' experience in tax consulting and financial reporting. She currently works as a tax manager with PwC Nigeria, where she advises multinationals and indigenous companies on diverse tax matters. Blessing is a seasoned corporate trainer in tax matter, a graduate of accounting from Obafemi Awolowo University, and a member of the Institute of Chartered Accountants of Nigeria. You can drop an emoji on that Zoom room or online just to celebrate, first speaker. The second speaker is Barrister Taiwo Onokoya, a seasoned legal and tax consultant with a strong background in Nigerian tax law and advisory. A lawyer called to the Nigerian bar in 2018, she began a career in tax consulting in 2020. Taiwo is known for an analytical approach to solving complex tax issues and our ability to help businesses optimize tax positions while staying fully compliant. And definitely, last but definitely not the least, is our last speaker for today, and Barrister Anu Oluwapo Adekoya. Barrister Anu Oluwapo Adekoya, with over 7 years of tax experience providing tax and regulatory support to businesses, she brings to bear to this conversation her experience in managing employee taxes, which she has been doing for the past 7 years. Okay, without any further ado, I will go straight into the conversation by introducing our first speaker. Our speaker who will be speaking with us for about the next 15 minutes is Mrs. Blessing Akinwale, and she will be speaking on the subject, what business owners need to know. The next voice we'll be hearing will be that of Mrs. Blessing Akinwale.
Good evening, everyone, and welcome to today's session. Once again, my name is Blessing Akinwale, and I'll be taking us on the session about the Nigeria Tax Reform Act and the implications for businesses. Minister Emmanuel already did a brief introduction of the Tax Reform Act. We have four laws that have been signed into 4 acts that have been signed by the president, and the major objectives, like he said, is to harmonize our tax systems. So I know that there are lots of questions around, we pay a lot of taxes. There's beyond what we pay as individuals. Maybe as an employee, my employer already deducts tax from me. When I go to the supermarket, I still get to pay taxes when I buy stuff. Why do I have to pay multiple taxes? One of those issues are the major objectives of this tax reform, to ensure that our tax system is harmonized. We all know what exactly we're paying and exactly what the taxes that we're paying should do. From the business perspective, I would like to start by firstly introducing to us what taxation is for businesses in Nigeria. In Nigeria, your business is taxed primarily based on how your business is registered. So if you are registered as a limited liability company, you'll be paying companies income tax, right? Because why is that? Because your business is seen as a separate legal entity from you, right? But if you're registered as probably a business name or a partnership, which we refer to as unincorporated businesses, the business is not seen as a separate legal entity. So any business registered as a business name or a partnership is seen as the same as the person that has registered the business. And for that purpose, you'll be subject to personal income tax. This background is very important because it defines the direction of the taxation of your business. So if you understand this from the get-go, you'll be able to tell, okay, what tax authority am I paying to, which laws am I supposed to be complying with, and all of that. So it's important that you first of all get this. The first question you need to ask yourself as a business owner is, how is my business registered? If you're registered as a company, you'll be paying, or you'll be subject to income tax as a company. That is a company's income tax. And you'll be paying to the Federal Tax Authority. But if you're registered as a business name or a partnership, you'll be subject to personal income tax, and you'll be paying to the state tax authorities. Now, when it comes to the tax reforms, from an income tax perspective, what are the things that are changing? The first is that for companies, our rate of tax remain the same. Somebody say hallelujah. Our rate of tax for companies is the same. And there is even good news from that, because there is a possibility of that tax even coming down from 30% to 25%. The laws have given an opportunity for the president to issue an order to be able to reduce the tax rates from 30% to 25%. So that is good news for us. From the individual side, the tax rate is changing, definitely. And why is this? One of the major objectives of the reform is to make the tax system progressive, like Minister Emmanuel said. So what the change is doing is to reduce the tax burden on low-income earners and push that tax burden to high-income earners. So if you look at the screen, you will see our new personal income tax band rate compared to the old one. You will see that for the old, we have very low tax income tax bands with very high rates. So you have somebody earning as low as 300,000 naira in a year, paying income tax at 7%. Somebody earning as low as 3.2 million naira in a year, paying income tax as high as 24%. But under the new tax act, you see that from 800,000 naira and below, if your business and your incorporated business earns a profit of 800,000 naira and below in a financial year, you will not be paying any income tax at all. But then it goes up and up and up, and you see that the highest tax band now is 50 million naira, and that tax rate is now 25%. What does this mean overall? It means that individuals earning, from a quick simulation that we've done, individuals earning below 20 million naira per annum would actually see a marginal reduction in their personal income tax, while those that are earning from 20 million naira and above would now see an increase in their income tax. And so that is good news for individuals and even small business owners. But there's still more good news coming for small business owners. The next is on development levy. Now, we've seen in current tax law, we have, beyond just our company's income tax, we have several other smaller taxes that companies are subject to. Education tax, if you are in the tech space, if you're a company in the tech space, you are subject to, IT levy, there is a police trust fund levy. It's just all over the place. Now, in line with the objective of the tax reform to streamline our tax process, all of those smaller taxes have now been consolidated into one levy, which is going to be at 4% of your assessable profit. And I don't want to go into all the technical details, but what this means is that you don't now have to pay multiple taxes. You have to pay just your company's income tax at 30% or even 25%, and the development levy at 4%. If you're operating in the financial services, tech space, telecom space as a business or incorporated company, it's even, you would experience a reduced tax because the base on which you were paying tax before will now reduce. All right, this is the big one that everyone is looking forward to, and that is the redefinition of a small company. Under the current Companies Income Tax Act, small companies are defined as companies that earn an annual revenue, or what we call turnover, of 25 million naira and below. That's what we currently have. That's what we had in the Companies Income Tax Act. Now, in the new Tax Act, this threshold has been increased to 100 million naira. And what that means is if you run a business that is incorporated and your revenue in a year is below 100 million, is 100 million and below, you are recognized as a small company. And what are the implications of that? Number one, you are exempted from companies' income tax. Number two is that you would also be exempted from the development levy. I just spoke about the development levy and the company's income tax. So there is no CIT and development levy for small businesses. In addition to that, you will still have to file your annual income tax returns, but it has now been simplified. It means the simplification is that you don't need to have your financial statements audited. So you still need to put your books together, you still need to prepare your financial accounts, but it just needs to be attested to by a director of the business or a senior person in the business. You don't have to get it through the audit process, pay an auditor and all of that, even though that's good for other purposes, but for tax purpose, that will no longer be required. We'll also have an exemption from charging and filing VAT returns. So it means that products and services that small companies sell the small companies will no longer be required to charge VAT or file VAT returns. Each of these things have significant implications, which we'll probably go into in the Q&A, but it's just to tell you that the objective of the tax reform, which is to reduce the burden on small businesses and small income earners, is very huge, and it's something that is, important for everyone to come into. You also still need to be registered for tax purposes, get your tax ID if you haven't gotten that, just to ensure that you are able to enjoy all of these benefits. Now, a major result of all of this, which I would like to mention, is that it encourages everyone to formalize their businesses. Currently, over 90% of businesses in Nigeria are informal, either as unincorporated businesses or even not registered at all. Only about 10% of businesses in Nigeria are actually recognized as corporate entities. So this drive is actually encouraging you to bring, your business, come and register properly, because if you stay as an unincorporated business, a business name, a partnership, if you stay that way, you will still be subject to personal income tax, even if you're below the 100 million revenue threshold, right? Like I said, your business name, your partnership business is still the same as you. So all the profits you make from your business can still be taxed under your Personal Income Tax Act, right? But if you incorporate the business as a limited liability company, you can enjoy this 100 million threshold exemption. Okay, another important change that is coming through is the introduction of minimum tax. Under the Corporate Companies Income Tax Act that we've just, that we no longer use, we are now in the new tax regime. Our minimum tax was based on turnover. And what does that mean? If you are a loss-making business where you don't get when we compute your tax is 0 because you're loss-making, or when we compute your tax is lower than what the law requires as the minimum that you're supposed to pay, we have to go and tax your revenue. Whereas as a business, we should only be taxing your profit. You should be able to take a deduction for your cost, right? But now, under this new tax act, we've now moved from a turnover minimum tax regime to a profit minimum tax regime. What that means is our minimum tax is now on 15% of our profit before tax. This is very huge, and when we get into the Q&A, maybe we'll be able to go into the details. But the point is, we no longer have a situation where loss-making businesses still have to pay something, even though they are loss-making. We are now in a position where if you're loss-making, you are automatically, exempted from tax, from paying tax in that period. Even where if you have computed your tax and you have no tax to pay, basically. Finally, I would like to talk about VAT, just very briefly. These are also very important changes that are coming up and are important for businesses to know. Number one is that you can now recover your VAT costs much more than we used to be able to recover under the old law, right? Before, if you do not sell goods as a business, any VAT you pay to your suppliers is automatically a cost to you. You cannot transfer that cost to your customer. But now, under the new law, any VAT cost you bear on services, on fixed assets, when you get services from a supplier and they charge you VAT, you can hold that VAT separately and recover it. You take it out when you collect VAT from your customer. That way, you are able to have a higher profit margin and reduce your overall cost. We also have a lot of services and products that have now been designated as zero-rated. What that means is that common man, everyone will not be paying VAT on those items. So if you buy basic food items, for example, currently, we don't pay VAT on those. But when we don't pay VAT, the supplier suffers because the supplier has to take all the costs that they have borne and, increase their costs, thereby reducing their profit margin. But now, with those products designated as zero-rated, all those, VAT can now be recoverable. So that way you can increase your profit margin and, the business can boom even properly. So, that's just a summary of some of the changes that are very key that businesses need to know that we have put together. I'm happy to take questions when we get into the Q&A session, just so we can dive more into it and get more details. Thank you very much.
Wow. Can you just celebrate Mrs. Blessing Akinwale for that powerful delivery on what businesses need to know? She sounded more as like an apostle of joy, apostle of good news. What has changed to the benefit of business? And I can see the reactions in the room. People taking note and saying, wow, so small business are no longer just 25 million, 100 million. That's something decent amongst others. But the good news is that we continue the conversation during the Q&A session. So don't forget to use that Slido link to begin to ask all your questions. And as we are here this evening to take all those questions as much as we can take. Very quickly, we'll go straight into the second conversation. And our guest speaker is also ready, to take us deeper into the conversation. We have Barrister Anu Oluwapo Adekoya, and she will be taking us on the conversation on what employees need to know about the new tax law. The next voice you will be hearing will be that of Barrister Anu Oluwapo Adekoya.
Good evening, GLT Nation. It's so good to be here. Thank you, Daddy. Thank you, Mommy. Thank you, the leadership of GLT Business School, for this amazing. Okay, so thank you so much, Mrs. Blessing, for that great insight into the impact of the Nigerian tax law as it affects companies and businesses. So we'll be talking about the impact of the Nigerian tax law. And I believe you would want to say, I'm an employee, so why should I be concerned? You know, I would take us back to what Minister Emmanuel said not too long, that this tax system that we have now is progressive. That means it is to the advantage of some and might not be to the advantage of some. So let's look at something first. I came with a quote here because I know I have come to the people of God, and I've come with Romans 13:6-7, which I have interpreted as this, to say, this is also why you pay taxes, for the authorities are God's servants. Give to everyone what you owe them. If you know what you owe to Caesar, give to Caesar. What you owe to the Nigerian government, pay to the to you as an employee. I know we have business owners in the house. We have, people that run NGOs. We have people that have employees in the house. So as an employee, even as a business owner, why does this matter to you? So the first thing you need to know is that your take-home might change. So the salary you take home every month might change. The other thing I want to also bring to our attention is that every other income we have as an employee is now being considered. Unlike before, before the advent of the Nigerian Tax Act, that what you care about is what you're earning, your salary majorly. Now we also want to consider the side incomes you have, your freelance, your side hustles, your other source of income, as we have always prayed about. Another thing you need to know is that before, we used to have what we call Consolidated Relief Allowance. That's the CRA. That is no longer available. And what we have now is the rent relief. I'll be talking about the rent relief, when I get further into this conversation that I'm having with you right now. The last thing I also want to bring to your notice is that employees now have more, proactive compliance responsibility. It's no longer the case that you're not concerned or you don't really care about what's happening as an employee. Now what the law is saying is you have to be concerned. You also have to take actions as an employee, even though the burden of filing your tax is on your employer. So let's talk about the income that you're taking home. What is the law concerned about? What is that taxable income? What are we going to tax? So as an employee, you have what you call your gross income. That's the total that you're entitled to every month or at the end of a year. So the law is saying now that what we are going to be taxing would include your salary, your bonuses, your allowances, your benefits in kind. So if you have housing, cars, loans given to you by your company, this would be considered for tax purposes. Also, your capital gains. So now what the law is saying is that if you if you're selling or if you're disposing an asset worth more than 150 million naira in value, or you're making a gain from that asset in about 50 million naira and above, that will be considered, for capital gains tax. Also, we have what we call the rental income. So maybe you have a property, you're leasing that property, or you have, a building for rent. That income would also be considered. Like I said earlier, your side gigs, your freelance business, the income you're making from that. Also, interest, dividends, and royalties, prize, honorariums. So if you're that person that gets honorarium, it's time that honorarium would actually, will be taxed. But anyway, it's not every kind. I would say that honorarium that is, that has expectation of, with performance expectation, that will be taxed. Also, your digital income, your cryptos, now we have to consider that for tax as well. So I haven't talked about the taxable income that you have. I believe you now have a good understanding on what and what to not be taxed. And you're no longer in that place of, okay, maybe any amount in my bank account will be taxed, any money sent by my employer will be taxed. Please know that, when it comes to reimbursables, refunds, maybe you had an expense for your company and your company paid you back that money without, any form of profit or income in line of that amount that you got, it will not be taxed. So any reimbursable, like I said, or refunds would not be taxed. Okay, so I talked about the rent relief earlier. So the rent relief is now the allowance that you have. You can say, okay, I'm getting this amount every year. How is the rent relief going to work? What happens? What does it even mean? It's very simple, just as the name is rent relief. So this actually means that when you have, as an employee, you're living in a rented apartment. please know that the rent relief is not for everybody. Yes, it is a relief, to employees, but not to every employee. You have to be eligible. So what makes you eligible for the rent relief? So what makes you eligible is, one, you're actually living in a rented apartment and you're paying. So if your husband is the one paying and it's not your name that is on, the receipt, you're not going to be entitled to a rent relief at your place of work. Also, maybe, for example, you're living with your parents, you would not be entitled to a rent relief. Yes, you would not be entitled to it because you are not actually paying rent. So it is who is paying rent that is eligible, to enjoy this relief. So let's talk about some, allowable deductions that would allow the employer to deduct from the employee's money. So we have, as usual, like we had it before, even before the advent of the Nigerian Tax Act, we have the pension contribution, we have the NHF, the NHIS, the approved insurance premium, and interest on owner-occupied, home loans. This means that when you get a loan for you to, probably build your property, your home, then you would be entitled to an exemption. So I haven't spoken about this. I know that on your mind you have that question. Okay, how much am I going to be allowed, in this rent relief? So the law has provided that you are allowed to deduct 20% of your income, of your annual income, and that 20% is capped at an amount. It is capped at 500,000 naira. So if your 20% is above 500,000 naira, that means the highest you can get is 500,000 naira. But if it's below 500,000, then all you can get is that 20%. I hope that is, very clear to every one of us. So what are your obligations as, an employee and as an employer? So let me start with the employer. Now we have said that you are, as an employer, you have the duty, you have the responsibility of ensuring that your employees, they pay, their payee. And, let me backtrack for a second. Maybe I didn't mention it. Payee is a system whereby the tax of an employee is deducted at source. So as an employee, you are not the one to go and pay your payee yourself. The employer has the responsibility of making that payment for you. It is a form of, withholding tax. We deduct it at source before we give you your salary. So that's why you're not even bothered about what is happening. So for people that are like, okay, I really don't care what is happening, I just know I'm collecting my salary. I think this is a wake-up call to you to know that you really need to care about what is happening, how much is being deducted, how it is being deducted, when it is being remitted, and, every other information you feel like you need to, arm yourself with. So I haven't said that the employer and the employee has responsibility. As an employee, what are you supposed to do? First off, if you want to enjoy the rent relief, you need to ensure that, you have your evidence of rent payment. So maybe your tenancy document, your receipt of payment, you have to, have that with you. I would advise that you get that to your, HR department so that they can confirm that you actually made that payment. As an employer, what are you supposed to do? What you're meant to do is, the first thing is deduct payee monthly. So if you've not been deducting, you have to. One of the things that the new tax law is now doing is that it's now making, compliance more stringent. So unlike before that, maybe the penalties might not be so obvious, they might not be that stringent. The new tax law is now, holding us by our jugular, let me use that word, to say that you have to comply with the provision of the Act. So please ensure that you deduct monthly. You also have to remit on or before the 10th of the preceding month. So for the salaries that you pay in January, you ensure that you remit, on or before the 10th of February. As well, you have to file what we call the annual returns. So known to people, that is the Form H1. So the timeline for filing the annual returns is on or before the 31st of January every year. Like I said earlier, the employee also has a responsibility, which includes disclosing every other income source. So unlike before that, all you just need to know or all you just need to do is I've paid my payee and then I can move on. Now, the law is now pronouncing it more that you also have to ensure that you also file your returns. That is your personal income tax returns. You file it on or before the 31st of March every year. So as your employer is filing for you, you are also filing yours as an individual. So you have to, do that as an employee. So I haven't said that you deduct payee monthly as an employee. You make sure that you remit in time. You file the annual returns. Also maintain digital records of the returns you have made. Have records, at least up to 6 years. Have records, of the filings you have made. Also provide electronic pay slips. So as you're making payments to your employees, ensure that maybe you're sending the electronic pay slips to them, and you're also keeping records of that. So one thing that is very, very important at the point of maybe onboarding your new staff as an employer, or even the current staff that you have, is to ensure that they have their tax identification number. We've spoken about it. Mrs. Blessing has mentioned it, that it's very important to have the tax identification number, because that is, just like your identity card to show that I am a citizen, I'm a taxpayer, and this is the record of my tax. Also, one thing that we don't do normally, in this side of the practice is, I know that most companies might feel it is not necessary, is keeping, information on people that are leaving your firm or your company and new persons that you are hiring. For example, you had maybe 100 employees at the beginning of the year, and maybe at the end of the year you have 150. The new 50 persons that you brought in, keep a record so that the tax office is also abreast of the new persons you're bringing in. And if you have people leave your firm during the year, you also have to ensure that you keep the record of that, so you can show to the tax office that, oh, this persons, they left our employment during the year. So just to recap again, what are the documents that you have to retain? So it includes your payroll register and pay slips, your payee schedule, your pension, NHIS, and evidence of payment of that. So I will just go to the tax band. We have spoken about it earlier, that something has changed in the tax band. Before we used to have, the first 300, the next 300, it goes that way. Now we have the first 800 at 0%. So if as an employee, what you're earning is around 1 million, 2 million naira, 800,000 in a year, then you know that most likely your money is safe and might not be touched at all. And we have the second, which is the next 2.2 million, taxed at 15%, the next 9 million at 18%, the next 13 million at 21%, the next 25 million at 23%, and then, above 50 million at 25%. So I want to also speak about, people that earn digital income. One thing that is very important is to know that the fact that in your digital income you made a loss, you're not going to be enabled to deduct that loss from maybe your payee or another source of income. So wherever you have made that loss, you will not be allowed to deduct it from another source of income. Just to cap it up, I would say that it's better to be well-informed, just like we are here now. You're well-informed and do, that which is required of you as the law has provided, rather than, start acting reactively when maybe the tax office is requesting for documentations or anything. So I believe that, we are clear about the employee obligations. So if you also want to know what your tax is going to look like, okay, how much is my tax looking like? How much does it look like I'm going to pay? Then you can see on the screen a self-assessment and tax ID obligations. You can see 2 links projected for you. So you can just see the link to generate your TIN and also the link to assess your potential tax liability. So I believe that if you have questions, we would address those questions during the Q&A session. Thank you so much for having me. It's been a delight, presenting to you and speaking to you on what the impact of the Nigerian tax law is to you as an employee, and also how it affects the employer. Thank you.
Thank you very much, Barrister Oluwapo Adekoya, for that insightful section on what every employee needs to know about the new tax law. I can see the questions coming in, and I'm already excited about the Q&A session. Our speakers are here, and they will come back, to come and answer all the questions that are coming in. So stay glued and don't leave. If you are just joining us, you are joining the pre-expansion 2026 conversation where we are discussing, the Nigerian New Tax Law and everything that you need to know. We've had the very first session speaking to what every businesses need to know, and just now Barrister Oluwapo Adekoya took us through what every employee needs to do. So we still have one more session coming. After a short break that we're going for now, and we'll be discussing, what every NGO, religious organization, foreign investors need to know about the Nigerian New Tax Law. So let's go for the short break, and I'll be back.
800,000 naira income. No, you don't pay tax on your balance.
Paying means pay as you earn. It's a system whereby your employer deducts certain money from your salary and remits it to the government.
You pay your tax to the government.
the state government, and the federal government.
It will lead to heavy penalties. For example, for individuals, first offenders are charged as high as 100,000, and then for subsequent ones as high as 50,000 naira.
SIN is tax identification number. It is a unique number that is assigned to a person, and you can use it for clearing imported goods.
Yes, you need to pay tax when you sell your land or when you sell your share. Why? Because what they are taxing is your profits. So if you sell your land more than you bought it, then you are going to pay tax on the amounts like higher than what you bought it.
So the answer is no. So if you pension don't pay tax, your incomes are not taxable. But any income outside the income that government pays you is taxable. So this is an encouragement for everyone in the body of Christ to ensure that they are conversant with the policies, particularly with the one in Nigeria currently being enforced, so that we can know how to position ourselves the best way to be able to do well for the community. Thank you so much.
In business growth and success, there's nothing like nice.
So it's either you are improving value or you are destroying value. There's no middle ground. Any marketing strategy you have that does not take into account competition is not complete.
When you think about team size, it's not just about the number. It's quality over quantity. No one person can tell you you need 10 people, you need 5 people. You look at the stage of your business. Am I in the startup phase? Am I in the growth phase? Am I already nearing maturity?
I want to tell us that it's very, very easy to do business with government. How do you do about it? Or how do you go about it? All you needed to do is to get yourself registered with them.
We can look at the apparent, and by faith, we are receiving an alternative instruction that when we act on it in the now, we may seem like the fools, because there's an intelligence from the future that the Lord is bringing into your heart now. You can make money by trading, but if you want to grow a business, you have to go into the marketplace.
Welcome back, welcome back. I believe you are still glued, to your screen, and you're already getting all the insights that you need, to make the most of the new tax regime in Nigeria. I just want to remind you that Expansion 2026 is coming, and you should be anticipating this event. The school, GLT Business School, has already curated a wonderful event, and in coming days, your timelines will be flooded about information about Expansion 2026. So check your WhatsApp pages, your social media groups for information, and do not hesitate to register once you see this information. Expansion 2026 this year is definitely an event you don't want to miss. So let's go on, continue in our conversation as we take the last presentation for today. And Barrister Taiwo Onokoya is already waiting for us as she will be diving us deeper into the subject of what you need to know as an NGO, religious organizations, and foreign investor.
Good evening, everyone. Thank you for being here. And our last two speakers have given us so much insight, and we are still diving in. And right now, we'll be looking at how the New Tax Act affects NGOs, non-profit organizations, religious organizations, and foreign investors, or foreign companies, which we also call foreign companies, basically. Yes, a big thank you to Mommy and Daddy for this privilege. I do not take it for granted. Thank you so much, sir. So, the new tax regime differentiates entity based on the purpose, the source of income, the type of transaction they deal in, with specific rule to NGO, NFPs, which is non-profit organization, religious organization, as well as foreign investment. So I would like to highlight some things. Generally, the income of NGOs and NFP are exempted. Also, donation, offerings, and tithes are generally exempted. However, foreign investments do not enjoy this exemption. They are not so lucky. They are usually taxed on income sourced in Nigeria. Every of their income that they receive or generate from Nigeria will be subjected to CIT, that is company income tax, VAT, and capital gains tax as well as withholding too. So let's look at the corporate income tax and exemption for these three entities. So for NGOs and NFPs, which is non-profit organization, they are exempted. Their income are exempted. Of course, they don't carry out business to earn income, to earn profit. So whatever they do, as long as they stay with the objective of the business, and the objective of the business, whatever income that comes in via various means is utilized to attain the objective of the business, they are usually exempted. However, they must register and obtain tax exemption status with NRS, that is the Nigerian Revenue Service. They have to register with Nigerian Revenue Service to be given this exemption. So for religious organization, income from donations, offering for spiritual activities are generally tax exempted. However, where they carry out commercial activities, such as leasing, such as renting their properties or buildings, such as selling of food and other things like that, they will be subjected to CIT. Whatever income they generate from that business will be subjected to CIT. Moving on to foreign investors or foreign companies, usually they will be subjected to CIT based on the significant economic presence rules. So what is the significant economic presence rule? It says that where you are a non-resident company, where you are a non-resident company and you generate income from Nigeria, from the virtue of you generating income from Nigeria, you'll be subjected to tax. That is what SEP rules basically says. So exemption. You would, however, enjoy some exemption if Nigeria has a double treaty with the country you are resident in. For example, if Nigeria has a double taxation treaty with London or UK, for example, your income, the income you generate from Nigeria would be able to enjoy some form of rebate or some form of exemption, such that you will not be taxed twice. Like you'll be taxed in Nigeria and you'll be taxed when that income comes to UK. That is what we call double taxation. So where you have a treaty that exists between Nigeria and the country you are resident in, you are able to exempt some form of, to enjoy some form of exemption or some form of rebate, so that you are not being taxed twice. So I would advise that when it comes to CIT, company income tax, for these entities, meaning NGOs, NFP, religious organization, you maintain your accounting books. You maintain your books that segregate activities that are exempted and that segregate activities that are taxable, such that when audit comes, you are audit ready to show the NRS your activities. So that way, there is transparency. So moving on to capital gain tax. For NGOs and NFPs, CGT is you enjoy CGT exemption on capital gains that are applied for charitable purposes. So where you dispose your assets that you use in utilizing your objective or carrying out your objective, you enjoy capital gains. You enjoy exemptions from those type of disposal. However, gains from disposal of investments that are unrelated to the charitable activities are going to be taxed. So also, likewise, for religious activities, capital gains on donation or used for charitable assets, for example, where the church has a building of its own and you dispose of that asset is going to be tax exempted. However, likewise, similar to NFP or NGOs, sales of non-spiritual assets, such as a property that you are using as a rental property that is generating additional income for you, is going to be taxed accordingly. Moving on to foreign investors, capital gains would apply on your sales of shares in Nigeria. So where you sell your shares in Nigeria, it has a specific limit. Expect to be taxed on your gains. Also, disposal of assets in Nigeria, your digital assets are going to be taxed as well. However, you would enjoy, or you may enjoy, some form of exemption if you are in a country that operates a double taxation treaty with Nigeria. So the risk here, the advice here is to track all your assets, categorize your assets, and understand the assets that are exempted and the assets that are not exempted. This way you keep track of your documentation, you keep track of your disposal, so that if you have CGT liability, you can go ahead and make payment to avoid penalty and interest. So moving on to VAT, withholding tax for NGOs and NFPs. NFPs and NGO, they enjoy zero rates on VAT, on donation grants applied for charitable purposes. So whatever you use or consume that are for charitable purposes, you enjoy zero rates on such, so that in that sense you would pay zero rate. And withholding will apply on third party. What I mean is that, for example, if an NGO employ the use of a cleaning company, so this is outside the objective of the business, objective of the NGO. So where you employ or make use of a third party, whatever you are paying them, at the end of the day, whatever you are paying them, you ensure you withhold, because the law specifies that whenever you have a transaction with a third party related party, you have to withhold. So you withhold on transaction on third party activities, services, and you have to report it. You have to remit whatever you withhold. For religious organization also enjoys this exemption that NGOs enjoy. VAT is exempted on spiritual activities, but VAT is payable on service enjoyed. VAT is payable on service enjoyed. So when a church or religious organization make use of a third party and the third party renders services to the religious organization, you have to pay the VAT on those transactions. Also, for religious activities or religious organization, you pay payee. You pay payee to the relevant state internal revenue service on the employees that you have. You ensure you pay your payee. So for foreign investors, withholding would generally apply to your dividend, to your interest, and to your royalties. That may, in most cases, be the final tax you pay on that type of transaction. Also, if you don't comply with the non-compliance, may block treaty benefits. So where you fail to comply with Nigerian laws and you are a company, you reside in a company that has a double taxation treaty with another country, non-compliance with this Nigerian rule of paying your tax as at when due may block you from enjoying the tax, the exemption, or the benefit you're supposed to enjoy. So I would generally advise, whether you are a foreign investment company or you are a non-resident company, you try as much as possible to comply to Nigerian tax laws as well. So my advice, when it comes to VAT withholding and operational compliance for these entities, NGO, NFP, implement your VAT and withholding compliance framework across all levels. Recognize the VATable items that you are into, recognize the zero-rated items, recognize the compliance when it comes to withholding. When am I meant to withhold? When you are not meant to withhold, don't withhold, because at the end of the day, you have to comply to all these rules. And non-compliance to this rule may also block you from fully utilizing the exemption status that you've been granted. So you, as much as possible that you've been granted this exemption, failure to comply with these exemptions means that you'll be robbing yourself of the exemption. So, speaking to donation grants and foreign funding, only donations used for approved purposes will qualify for exemptions, whereby you have donor-funded projects. Whatever those projects are for, use it for it. Whatever those whatever income comes from those donors, ensure you use it for those projects. Because at the end of the day, you are still going to be reporting to Nigerian Revenue Service. Foreign grants must also comply with NTA and NTA reporting. That is, there is a reporting standard required. Ensure that you comply with every form of reporting that you are required to comply with. As well as where you have digital funding platform, whatever gains that you get from those platforms, ensure you pay the relevant CGT. You may say that, oh, how will Nigerian Tax Revenue Service track my Bitcoin? Believe me, they do a lot of data mining. So it's on your own part. You don't even need to bother about how they do it, but ensure you pay to Caesar what belongs to Caesar. Also, maintain a audit-ready record for grants, donations, and digital investment. As a non-profit organization or an NGO, you have to be transparent, because at the long run, this will affect your goodwill. This will affect your business. This will affect your goodwill. Once the Nigerian service treats you as see that you are non-compliant, their audits for you will be raised. They would raise the bar for you and will always monitor your compliance level. So it is for your own benefit to register, to comply, to keep records, audit-ready records of your transaction, of your donuts, of your projects, of your digital investment, even your capital gains, your chargeable assets. As you're disposing, ensure that you are paying what is right, what you are meant to pay at the right time as well. Don't say that because I'm exempted, I am excluded from reporting. No, you are not excluded. In fact, they will raise the bar for reporting for you because you are a NFP or because you are an NGO. So the bar is usually raised because they know you don't pay tax. So they want to ensure that the activities you're carrying out is truly tax exempted. Also, distinguish between restricted and unrestricted fund. When you are an NGO or you are a whatever case that you may be, whichever entity you fall into, ensure that your funds now, they are used for what they are meant for. Don't divert funds such that whatever you report is what it means. By the time they're checking your book, they find out that is exactly what you use that fund for. And finally, how do you manage your risk as this type of entity, as an NGO? Like I've said, I'm re-emphasizing on compliance. Ensure you compliance with the rules, ensure you compliance with the law, and at the end of the day, your business will be glad that you did. Thank you.
Thank you, Barrister Taiwo Onokoya, for that powerful delivery. I believe those running NGOs, religious organizations, their notes are already full. Thank you for that session. You can drop what you have been getting from the conversation so far in the chat room. Let's get feedback from you. I bet you the questions are pouring in, and we only pray that we have all the time to take all the questions that we have, even as we go into the Q&A session. My guests are ready, and I believe you are all ready to kickstart the conversation again. Thank you, folks, for that powerful conversation, starting from what businesses should know to what employees to know, and now finally, we discussed what NGOs and religious organizations need to pay attention to. So I will try to do a good job, with this question. I will try to wrap up some so we can be efficient with time. But before we go into this question, I want to ask, Mrs. Blessing Akinwale, you did not mention about withholding tax. I've had a lot of businesses ask me questions about withholding tax. How does it work? And especially in this new regime.
Okay, thank you very much. All right, so I didn't mention it because the changes in the tax reform laws did not really change the withholding tax regime. But withholding tax system is actually an advance payment of income tax. So the way it works is when people perform services to you as a business and you're paying for those services, the law requires that you deduct some amount, some percentage of that payment and remit it to the tax authority as an advance payment of your supplier's income tax. So that one way or the other, supplier cannot get out of the tax net, because at the end of the day, we are expecting your supplier to go and file their tax returns at the end of the year, but they may not do that. So a way to ensure that tax is remitted early enough is through the withholding tax process. So as a business, you are supposed to deduct withholding tax from your transactions with your suppliers before you make payments to them. We have a table of withholding tax rates and different types of services that are covered. But to be honest, most services are actually covered. There are just a few services that are exempted. At the end of the day, small businesses are still exempted from the requirement to deduct withholding tax as well. Although those rules may need to be adjusted because there are some restrictions around it. But basically, on a basic level, as a small business, you are still granted that exemption. What that means is, if you're a small business within the threshold, you are still allowed to pay the full amount to your suppliers. You won't deduct withholding tax, but you still need to maintain accurate records such that it's clear that you paid the money to the supplier and you did not hold it without remitting, so that you don't get penalized. That's just a summary of it.
Thank you very, very much. I think that was very helpful, because it's important that we bring that full perspective, especially for business owners dealing with vendors. Barrister Anu, let me check with you very quickly. I have a question here. It said the new threshold for small businesses is, 100 million. You said that, blessed. And I said for professional businesses, does that threshold apply?
Yes, so we've had variations of the tax laws. One version excluded professional services, but there is a version that has now been released by the National Assembly that has taken away that exclusion. So professional services...
Should we still be expecting another version?
So maybe we will have to ask the taxman whether we should expect, but we expect that this should be the final version. Any other changes that need to apply may probably come in later through Finance Act processes, but as it is now, professional services firms are still allowed to be within that threshold, that small company threshold.
Okay. Thank you for that clarification. Hopefully it won't change, because I'm personally affected. Okay. Okay, great. So let me move to Barrister Anu. There's this question here. Will you advise a business owner to upgrade from a business name to a company, based on all we have discussed here this evening?
Okay, so this is the question that we always get every time. I think since the advent of the Nigerian Tax Act, it's been clamored by everyone. Should I go and deregister my business? Should I go and register a new one? Should I upgrade my business from enterprise to a limited liability company? So where I'm going to start from is that advice is not a blanket advice for everyone, because, just like Mrs. Blessing said, that a limited liability company is separate from its owner, while enterprise, that's a business name, is assumed as you are the one. Actually, it's like a trade. You are the one carrying on your business yourself. So if it is now a limited liability company which is incorporated, you have much more to do. You have much more burden than if it was a business name. For example, you have, of course, you still have returns to file as a business name, but the processes are more stringent because it's not just you. There you have shareholders, you have directors, you have a whole business that is separate from you. So what I would say is the first thing I would start with is, of course, get a consultant that knows well about your business. But for the purpose of this conversation, I would say that, we spoke about a threshold, a 100 million threshold. So I know that the fear is coming from, okay, if my business is making that much, or if it's not making that much, should I go and deregister? The first question you need to ask yourself is, as an individual, how much is that business making? Okay, have you started making 3 million naira, 5 million naira? Why, if you've not started making up to that, then why are you considering...
In profit, you mean?
Yes.
Okay. So
why are you considering the registration? However, if you've gotten to a threshold of maybe 50 million naira, 60 million naira, then that means that, I would say, in quotes, that you could consider, registering a limited liability company, because that 100 million naira is still going to be exempted. Of course, you are talking about your turnover generally now. So if you're making around that, you could consider, moving the aspect of your business that brings in that heavy weight of money to being a limited liability company, or, just creating a new company entirely. So I would just say that, so you don't leave here and say,
it's on a case-by-case basis.
Yes.
So you need to evaluate the fact and circumstances surrounding your business.
Yes.
Okay, good. Thank you very much. I believe Barrister Taiwo should be able to do this. I have this question on rent relief, although it was Barrister I know that discussed it. The person said, I'm still a bit lost on this rent relief. Maybe if you explain it, they will get it. Okay, do you get paid by your company? Or I'm not so sure of how it works.
Okay, thank you for that question. So the rent relief is an exemption you enjoy. The fact that you're in Nigeria, and I believe you have a house where you pay rent to, you have a landlord where you pay your rent to, or, nevertheless, you have rent as a relief. So the limit for the rent is either 500,000 or 20% of your rent, whichever is higher. So, for example, if you have 10 million as your rent that you pay monthly, the 5% of 10 million is how much?
20%.
20% of 10 million is
about 200.
About 2 million. So 500 or 2 million, it means 500 is what you're going to enjoy as rent relief. So the rent relief is a relief that reduces your tax, your chargeable, what do you call it now?
Your taxable
pay. Yes. So by the removal of the rent relief, it means the money they are going to be subjected to tax is going to be reduced. So at the end of the day, you are going to pay less tax. So before, we used to have the CRA as relief, but now it has been repealed. It has been removed. So the only relief you enjoy, one of the reliefs you enjoy right now is the rent relief. So that will be applied to further reduce your tax. Yes, thank you, sir.
And I think that is fair enough. Everybody in Nigeria, rent is a major issue, but the question is whether the relief is relief enough, you understand? Because if you maybe you are in the hub town up north, it may make some sense. But when you come to downtown, around this Lekki, Ikoyi, and you are looking at what will a relief of 500,000. And the relief, in a sense, is not the absolute tax deduction, it's just a deduction from your taxable pay before you then apply the tax ban, and maybe those are some of the conversations that we will still engage with the government on, see how they can review the relief to match, the economy. This honorarium is getting a lot of problem, so we may need to discuss it. Many people seem to be collecting honorarium in the GLT nation, and we need to help them, put perspective. It is, I go out, I minister, and they gave me something, say, thank you. You are now saying I'm going to pay tax on it. So there's this question here that will help us, summarize it. So, Barrister, what do you mean that, when honorarium have performance expectation is then taxable, but if there is no performance expectation, then it's not taxable?
Okay, thank you so much. So let me make it in this, let me give a scenario. So I'm here now, and as I'm leaving, at the top of my mind, I'm like, okay, as I'm leaving, maybe Minister Emmanuel should tell me, oh, my barrister.
No, I'm not giving you anything. In case
welcome. And before you leave, then it stretch, something to me. I'm expecting something. I have performed something, and I'm expecting something. So that is just, the basic line of saying, okay, with an expectation after performance has been done. So that kind of honorarium, I would say, is on a case-by-case basis. And the question, I was expecting is, how would the taxman, judge whether I perform, there was an expectation that made me get that honorarium. That's another thing that we also need to ask ourselves, that, okay, I've gotten this honorarium, but how are you going to evaluate whether it is by that, expectation or not? So what I'm just going to say is that what the law has said in the language of the law is that when you get that honorarium based on the performance and expectation of that value that you have gotten, then know that it is going to be taxed. That is why it is different from gift. That's one thing we also need to know, because, you could say, okay, that honorarium was given to me as a gift. A gift is something that was just given to you. You were not expecting.
Any performance.
Yes, for any performance, you just got it. But an honorarium, you had performed something, and we can also tie an expectation to that which you have performed. So that kind of honorarium, you are going to be taxed. So I know that it's going to cause a bit of, back and forth because of where we are. So let me allow Mrs. Blessing to also add to it.
Yes, I just want to add a scenario.
Yeah,
so
to clarify.
If you are an example would be music artists that go to perform. When a music artist is being invited, there are some music artists that will tell you up front, my honorarium is 1 million naira.
So you are providing a service.
We've already told you what the expectation is. After ministry, this is your money. So in that case, it's no longer a gift. It's now based on a performance.
Of service.
Of service, in a way. So, but in a case where, as we are going now, Mrs. Smith follows us and hands us a bag and says, Mrs. Akinwale, thanks for coming.
No, you still perform something.
But I did not expect
you still perform something.
So I'm just...
But we cannot exhaust that conversation.
Yes.
I think it's a developing conversation. But the clarity I just want people to have is that, when the Lord tells you to sow a seed into me, to my life, that one won't be taxed. Don't worry. You can sow that seed because there is no expectation of performance, And I think with that, we should be fine with that. Okay, there's this comment here. Mrs. Blessing, you mentioned something about input VAT, output VAT. Now, input VAT now expanded to cover all input VAT suffered. So somebody is asking that, how does it help you to boost your profit? You mentioned something about that.
Okay, so there's some accounting involved in this. So I will
a bit of jargon.
There's a bit of accounting in it. So when you perform a service, currently, under the current law.
Old law.
Under the old law. I keep thinking we're still in 2025. Under the old law, when you perform a service and you charge VAT to your customers, you collect the VAT. Now, the way VAT works is that the person that should bear the VAT is the final consumer of the service. So whatever VAT cost you have incurred, let's say as a consultant, for example, I perform consulting service. In performing my consulting service, I also employed a tech person to prepare a software for me. The tech person charged me VAT. I paid the tech person the VAT. The normal process should be that VAT I paid the tech person, I should hold it somewhere, such that anytime I charge my customers VAT, I can take out the one I paid to the tech person from what I collect from my customers and only remit the balance to the tax authorities, right? But the way the VAT Act was designed, only people that were selling goods could do that. If you are performing a service, any VAT cost you incur, in my case, the VAT I paid to my tech person, I will add it to the total cost of what I paid and put it in my P&L as an accountant, as my cost, as an expense. And then I remove that cost from my revenue to determine my profit. So imagine I paid 1 million with 7.5% VAT. My total cost in that scenario is 1,075,000. And then I made a revenue of 2 million naira. My profit is 2 million minus 1,075,000, which is like 925,000. That's my profit. But now, the VAT that I paid to my tech person, I can hold it aside and keep it somewhere. And I will only take the 1 million I paid to the person as my cost. So the VAT I paid will now be sitting somewhere until I collect VAT from my customer, which I can now use to offset. So now my profit margin is 1 million naira because my cost is just 1 million because there is no VAT included in my cost. That is the reason why your profit margin gets better with the new input VAT recovery regime. And moving of some of our items to zero rate even makes that better.
Much more better. Okay, let me move to a freelancer. When we did the pool, we have about 20% of them, plugged into this conversation. So this question says, as a freelancer, if I'm already being taxed by an international company or platform, do I still need to pay tax in Nigeria? Barrister Anu, what do you think about it?
So let me start by saying that you are in Nigeria, but you are telling us that the income you have is not being earned in Nigeria. That means you're making money outside Nigeria. Sorry, but you're residing in Nigeria. So the first thing that the law asks you to do is what? To tell us as the taxman that this is what your income is. Because, at the end of the day, we are seeing the movement of maybe a 10 million naira, 10 billion naira in your account, and we are not seeing you remit any amount. It gives us the right to say, okay, Mr. A, you have earned 10 billion naira in Nigeria. We expect that you come and pay this amount as your tax. So the first thing the law is asking you to do is come and tell us first your position. And we know that you have been taxed, but how are we going to really prove that you have been taxed somewhere? When you show us evidence that you have been taxed. So we've seen cases where people go to the tax office because they've sent them a letter, requesting for an amount, and they are so confused. Why is the tax office still, requesting this amount from me? I haven't paid tax somewhere else. So what you're required to do, as the law has said, file your returns, is to say that, okay, first off, I have paid tax. Then I have to be able to communicate that to the tax office that I have paid my, I've remitted my tax, somewhere else. So sometimes in practice, what you might do is to say, okay, if they had written letter to you, because I don't know, this person, why this person is asking this question. Maybe they've gotten what we call a best of judgment assessment. They've written to the person to say, oh, we can see that you are, high net worth individual, you are owing us 40 or 50 million naira, come and remit it. And you're like, I'm not even making this money, from Nigeria, or the money I'm making is outside Nigeria and I've remitted my tax already. So what you need to do, now please remember this on a case-by-case basis, but on a blanket case, what you need to do is, show to the tax office what your remittance has been. So in summary, I would just say that if you have been taxed, the essence of the tax law is not to double tax you. We don't want to charge you where you've already been charged. We want to see evidence that you have been charged somewhere. But there are other things that are also, tied to this, what we call the residency rule, that you've stayed in Nigeria. How sure are we that you are not even making any money at all in Nigeria and you are residing in Nigeria? So everything you just need to do is just to say, this is where I'm making my profit. I'm not earning from Nigeria. If there's any portion of my income that is from Nigeria, I will pay my tax on it. And if all I have, all I have as income is from maybe the US, the UK, I have already paid tax. And this is the evidence of that tax I had already remitted. Wow. So that's all about it.
Well, thank you. Thank you very much. Just to add to that thought, every Nigerian person, whether corporate or individual, you are taxable on your global income. So wherever it's coming from, you are taxable. So if you have suffered tax elsewhere, you can bring evidence to net off against the tax you will pay. I will go to Barrister Onokoya now. There has been this social media rules about, you better put description in your narration. If I transfer money to you, just say, na loan, no, this one na loan, no. You understand? So that the taxman don't come and misinterpret it. How important do you think this narrative is really important for you to be able to fully discharge your tax obligation? Or what is the role of having adequate narration? Let me read the exact question so that you get it. He said, please, is adding a description to every transfer mandatory? I would like to understand its purpose and how it relates to tax.
Okay, thank you so much for that question. So the Tax Act states what is taxed: your profits, your gains, your income. So if, for example, you have no income, you have no business, you have no transaction whatsoever, you're not generating any income, you're not supplying any value to anyone for a consideration in that sense, then there is no basis for you being taxed. Because Nigerian would always tax your income, your profits, your gains. So if you are not earning all these things, you will not be taxed. If you are a person and you don't have these things, you will not be taxed. So coming to the narration of your transaction, I think that is just news. That is just fake news. So sometimes, fake even news. If it's fake news,
we should relax.
You should relax, please. Just relax, because it has nothing to do with what the tax law says. Okay. The tax laws already specified the people that are going to be taxed. So if you are outside this bracket, you are not supposed to be taxed, and you will not be taxed. So you can be rest assured that you will not be taxed.
More so, it's just anybody could write anything as narrative. Yes. A smart taxman will not take your narration as the final. No, as the final. Okay, Barrister, I know wants to say something.
To the other side of the question that says what is actually, how is it related to tax? So I think people are also bothered about, okay, even if I put narration, what is going to happen at the long run? So just to add to what she said, that yes, your narration are not, in quotes, that important, because I remember I saw a post that said, Abego, he asked me for 2K. I give him 2K, no tax me, something like that. So what happens generally, like, Mrs. Taiwo said earlier while she was presenting, is that the taxman has a data. They don't have insight into everything that is in your account, but they know that there's a movement of an amount. Maybe they just know that 10 billion naira is sitting in this account, or maybe 10 billion naira moved. They don't know precisely what was used, maybe 500,000 for this, for that, for that. So that is why people might say, okay, put narration. But one thing that follows your narration is the history of your narration. So for example, yes. So if you say loan, what can you show me a loan document? What was it used for? So something has to be tracked. Something has to be traced to that narration you're giving to it. So just your own personal ledger as a business, as an individual, we can say, okay, come and use this to explain this transaction to us. What did you spend this on? Just to show that this is the evidence. So that's just what the narration is all about.
We are racing against time. So,
yes,
we need to wrap up this conversation very strongly. There's a question I want to take. I want to ask Mrs. Blessing Akinwale. I have this question said, as a limited liability company owner, aside the corporate tax, CIT, you are expected to pay, will you also be required to pay personal income tax as the business owner?
Yes. So, like we said,
the art of the person.
For a limited liability company, the company is separate from its owner. So, while the company generates profits and is taxed on its own profits, any income you earn as an individual is also taxable. So in the case of this person, let's say you earn salary from the company. If you pay yourself salary from the company, the salary is deductible for the company, but is taxable for you. So the company can enjoy an exemption that they paid you salary, but you as the individual has to be taxed on that salary. So yes, you still need to be taxed on any income you earn privately. If you also earn dividend from the company, there will be a withholding tax of 10%, which will be the final tax on that dividend. Or if you earn director's fees, anything you earn from the business that comes to you as the owner is taxable in your earns. And in some cases, deductible for the company. So it's not double tax.
Thank you very much. It's not double taxation. Okay, thank you, Barrister Anu. Let me take this question. With the new tax system, accept my old business name. I registered it very long ago, but I never used the business name and the associated thing. Will it still be recognized now, or I need to open another one?
Okay, so I think this is first going to, the Corporate Affairs Commission before you get to the tax. Now, business structuring and tax system are two separate things. So your business name, where it is, the question should be asked is the Corporate Affairs Commission, whether that business is still valid. First off, because I don't know if this person files annual returns and then every other requirement that is expected for a business to keep running. That's number one. So if you do everything that is required of you based on compliance-wise, then your business is still alive. It is still a going concern. Nothing would affect your business. No tax law. There's no provision of the Tax Act that would tell you that, oh, because your business is old, you cannot use that business name anymore. The only thing that is required of you is that there is a tax identification number for the owner of the business. That is tax identification number for the business if it's a limited liability company, because it's a standalone, it's a separate legal entity from you as a person. So just go and check if your business is still a going concern based on the records of CAC. If not, reach out to a consultant to help you file your annual returns if it is still possible to retrieve that name. If it's fine, everything is good with CAC, then your business name is very, very fine and nothing in tax will affect it.
Wow, thank you. Thank you very much, Barrister, for the response. Let me take this penultimate question from Barrister Onokoya. Good evening. I have registered my business. I have my TIN. Do I need any further documentation at the NRS office? No longer FRS. Okay, can I go ahead to open an account with the TIN?
Oh, yes. From that question, after registering your company, you go to NRS with some specific document because there is also a requirement that you will take to them. So on the face of it, the thing you got from CAC is not operative yet. So it is when you take that thing.
Audio thing.
His audio thing is on the paper. It's not working yet. It's not active. So you now take that thing right to the tax office for them to activate it, create an account for you on Tax Pro Max or on NRS, as the case may be, so that you can start doing your filings. Then that means you are good to go when it comes to tax. So it is until you register with NRS, your tax now becomes active. Okay. And they are ready for business.
I will take this last question, with Barrister Anu. This person is saying, is it only the basic salary of an employee that will be taxed? I don't want the person to go on with half knowledge, and that's why I'm taking this question. Yeah,
please permit me to do a bit of add up to what she just said before I pick my question. Okay, so because the person also asked that what are the documents that will be required. So some of the documents that will be required include your status report. If it's of course a status report, then the ID cards of the person, the utility bill, your certificate, hard copy for citing, and an application letter for your VAT application, and also operationalization of your thing. I think that would help the person, yes, get documents together. So yes, and this question on basic salary. So we know that there are components of gross income. So if you are aware of it, we have what we call the basic salary, transport, housing allowance. You can also, maybe your company gives meal allowance, furniture allowance, inconvenience allowance, airtime, data, all those things like that. So everything together, it accumulates to your gross income. So it is not just your basic salary that you are taking home. You're taking in all, by the time they are done, taking away your deductions, for example, the payee, the pension, the NHF, and every other deduction. Maybe if you also got a loan from the company, they deduct your loan. What you're taking home is called your net pay. Your net pay. So it is not just basic salary alone that you're taking.
So every benefit that accrues to you by the virtue of that employment is taxable.
Yes, if it falls under benefit in kind. For example, we are, like I said earlier, there's what we call salary, your benefit in kind, everything. As long as you are enjoying something from it, you are getting an income. Like I said earlier, refund is not taxable. Reimbursement that you had expended for is not taxable. Yeah, so data that you had called somebody and then they are paying you back for that recharge card is not taxable. But everything that is sitting in your payroll, most especially, and it is sitting as an income to you as an employee, it is taxable.
Okay, thank you very much. I will take our final comments, and that is about we can take this evening. We still have loads of questions here. What I will try to do, thankfully, these are GLT Nation experts, and within the GLT Business School community, we can always ask them to answer these questions and get the responses back to us. I will quickly take 10 seconds, our final thoughts about the Nigerian new tax environment. Barrister Onokoya, what we want to leave the audience with this evening?
My audience, I will tell you to comply. This tax act is not is not to punish us in any way. It's to ensure our books are transparent, is to ensure that we pay what we ought to pay, and is to ensure that where we are given benefits, we enjoy those benefits to the fullest. So I would say this is a new regime. Try as much as possible to keep your records. Records keeping is very, very important, because tax is not something you explain. You don't explain at tax office. It is record. You give them your record, they give you whatever it is, or the concession they need to give you based on your record. So please do not downplay on record keeping. It is very important, and stay compliant. Thank you.
Barrister, no, thank you. Barrister,
okay, so I think I will start with the saying that the law is made for man and not man for law. And this also means that if you claim ignorance, there wouldn't be an excuse for you to say I was ignorant of this. That's why I didn't do this. So I would just align with my friends here to say that please keep proper records. It is fact that speaks and not just words of mouth in the tax office. Follow the law. Follow what the new tax acts have said. And I know that some of us are a bit still angry with Taiwo Edele, angry with the government. There's really nothing we can do about it. But like we said earlier, give to Caesar what belongs to Caesar. And as we do this, we also hope that we see, this improvement and social amenities being provided for us as citizens. So please comply with the tax law. That's what I was saying.
Thank you, Barrister. Without your scripture anyway, we are doers of the word in GLT. Hallelujah. Glory to God. Barrister, sorry, forgive me. Mrs. Blessing, can I have your final thought, please?
An additional thought is structure. As a business owner, you need to think more about your processes and your systems. Put structure in place. Let the business be able to run without you. Let your employees be aware of all these things that we're saying. Let it not just end with you. Carry everyone along and put structures in place to ensure that you stay compliant.
Wow. Thank you very much, Mrs. Blessing Akinwale. And that's just about what we'll be able to take in this first edition of Pre-Expansion 2026 Conversation. Let me tell you, there are so much benefit and opportunities in the new tax regime, and that is one of the conversations that will be happening at Expansion 2026. So I believe you want to be part of it. So watch out as I invite Pastor Sesame Smith to come and say more about Expansion 2026.
Thank you, Minister Onosami. Thank you, everyone, for watching. And I'm sure it's been quite an insightful session. We've come to the close of that session now, and thank you. So every single one that has made it possible. We'll start with thanking Apostle Shegun and Funke Obaji for this opportunity, and the GLT Nation, the media team. Thank you so much. We're so grateful to our wonderful speakers. We say thank you. Expansion 2026 is coming up, shortly, and our theme for this year is actually modeling kingdom success, and we're going to be having an exciting time at Expansion 2026. Our speakers are ready, and we want to encourage everyone, when the link comes out, please register and plan to attend. I mean, this is just a pre-conversation, and this is what you should be looking forward to getting at Expansion 2026. We are so grateful that you've shared this time with us, and we've been able to speak on tax matters. I hope it has brought insight and clarity for you, and you're ready to take 2026 by storm. So can we just have a closing prayer even as we go? Father, we thank you for this evening. We thank you for your grace. We thank you for every word that came forth. We thank you for understanding and light that was brought forth. We ask, oh God, for every single business, individual, career person that has listened this evening, the ability to do, the ability to go out and put to effect that which they've heard. Lord, you grant it unto them. The grace to be able to come out on top in everything we do. Father, we say we receive from you in Jesus' name. Thank you for joining in this evening. God bless you. We look forward to seeing you at Expansion 2026. That's all from GLT Business School. Bye for now.
In business growth and success, there's nothing like nice.
So it's either you are improving value or you are destroying value. There's no middle ground.
Any marketing strategy you have that does not take into account competition is not complete.
When you think about team size, it's not just about the number. It's quality over quantity. No one person can tell you need 10 people, you need 5 people. You look at the stage of your business. Am I in the startup phase? Am I in the growth phase? Am I already nearing maturity?
I want to tell us that it's very, very easy to do business with government. How do you do about it? Or how do you go about it? All you needed to do is to get yourself registered with them.
We can look at the apparent, and by faith, we are receiving an alternative instruction. That when we act on it in the now, we may seem like the fools, because there is an intelligence from the future that the Lord is bringing into your heart now.
You can make money by trading, but if you want to grow a business, you have to go into the marketplace.